Good morning. How are you doing today? Hope the day is going as planned. You're welcome. We're happy to have you here. Okay, let's just give some time so that we have more people joining us. You're welcome. We see you. Thank you for joining us on this live. You're welcome to another live session with Trade Lender. And today we'll be talking about how to start building credit from the scratch. So with me here, I have a guest who will be taking us through the topic and telling us all that we need to know about the topic. Can you introduce yourself?
All right, good morning to all our viewers out there, and thanks for having me on the session today. My name is Anthony Olorokia. I'm the head of credit uh, at Trade Lender, digital bank for SMEs. Thank you.
Okay, thank you very much. Thank you very much. That's good to know. Okay, so like we talked about, the topic is how to start building credit from scratch. So I want you to give us a quick intro into the topic, just an introduction into the topic, what it entails.
All right. Firstly, we need to understand what credit is, and for the sake of knowledge, to our viewers out there, credit is a contractual agreement between a
Okay,
borrower in exchange for value,
okay,
mostly which could be for money, goods, and services, with an agreement to pay in a later date. And building credit from the scratch, um, it's all about um, laying the foundation, preparing towards that time that you will need credit.
okay. Now we have an understanding of what credit is. Okay, so I want to ask the question. I want to ask that what is a credit? What is credit score? What is
Now,
credit score? Why does it matter? And what are the factors that influences it?
okay, when you talk about credit score is like a number uh, allotted to your credibility. That's just a simple definition. It's
Okay,
like a number. We have credit score. It's something that your credibility is actually measured in a weight or a score, so to speak now. And it varies. It has to do with your eligibility. It has to do with uh, um, the your access to credit. It
okay,
has to do with all your previous credit experience, your previous credit journey. So it's like a score allotted to your credibility. That is what credit score is. And it's from 1 to 1,000. So each and every of these score, from bad to good to average to good, very good, low, medium, average, and excellent. That is what the credit score is.
okay. So what are the factors that influences this credit score the most?
Okay, so factors that influences the credit score are they are your um they are your one of it is actually your attitude towards previous credits
Okay,
that you took. These are maybe defaults, delay in payments, and at the same time it could be your consistent payment and all that. So these are some of the factors. When I say default, when you took a credit once and you defaulted, it actually drops the bar for you. So that affects your credit score. If you have not really taken credit before, it also affects your credit score. So if you are the type that, oh, you've actually taken credit, you've paid down, it was performing, so it gives you an excellent score. So these are some of the factors that actually cumulate together You understand? To impact your credibility.
Okay. What I mean actually is, as a credit analyst at Trade Lender, when I come to you that I want to take a loan, I want to take a credit, what are the things you look out for?
Okay, so basically, some of the things that we look out for. Um, I'll broaden it now. Aside one thing is actually important when it comes to building credit, which is your character. So that character is actually what you measure. It's everything about credit score is about character. So, and what do I mean by character? The character is actually what tells of your trustworthiness, right? And we won't know how trustworthy you are if we do not have access to your, credit score or credit report. And this is where you see, how you actually, your attitude towards previous transactions, previous repayments. And this is actually what informed us if this person is actually a good person, to deal with, is a good person to actually avail a credit facility.
Okay. Okay. There's something I wanted to mention and you have not mentioned it. I'm a business person and I'm coming to you for credit. What do you request from me? Like, how do you know that, okay, I have a good credit report?
Okay, so how do I know you have a good credit report? The major thing is once I have your credit report, which is from the credit bureau, I want us to realize that for every credit you take as a business owner, as an entrepreneur, there is a central record for this. And that central record is actually called the credit bureau, which actually, combine and archive all your credit history, right?
Okay.
Your credit in terms of money, your credit in terms of probably your credit card, your check issues,
Okay.
your all these things are actually, uploaded to a platform called the credit bureau. And
Okay.
from there is where we get access to what your credit journey looks like. And that is actually what informed us of the kind of person you are and your attitude towards, repayment, right?
Okay.
You might be a successful business owner or a successful entrepreneur. You are doing fine. You have a good cash flow. You have a good and excellent financials, but your attitude towards credit is bad. Once your attitude towards credit is bad, there is no how you can access credit. And this is actually one of the major policy, imposed on credit institutions by the CBN. Once you have a bad credit, no matter how substantial your statement of account is, your audited financials, or your cash flow in your business, it's actually a red flag.
Okay. Okay. So you mentioned two things now, the credit score and the credit report. So what is the difference between the two?
Okay, now credit score is the weight allotted to your uh, credibility, right?
Okay.
While credit report is a record showing all your credit
Okay.
record. It's like a record showing all your credit history that tells of the journey, how you've managed previous credit and your attitude towards repayment. It shows the previous records and your current state of credit at that point in time. So that credit report shows whether you are still having an outstanding credit that you've not fulfilled those obligations. It shows of the numbers of companies that you've actually taken credit from, right?
Okay.
It shows a lot of things. It shows your overdue. It shows the limit of credit you have ever or so far taken, right? So these are some of the informations that you have in the credit report. So that is actually all this information now have a score, right? those information are actually allotted a score. So on the credit report, you have a credit score, right? And like I said, your credit, the soundness, so to say now, of your credit report is actually what credit score is. It shows whether you are good or with all this report. It's just like a report card. Oh, you passed, you have A, you have B, you have C, you have, just like that. That's what credit score is. Why credit report is the entire list record of all your exposures and all, the history of your credit journey.
Okay, okay. So as a business person that does not have a credit score, as a business person that does not have a credit score, how do you start building it?
Okay, so as a business person, if you don't have a credit score, so now this is it. If you don't have a credit report, you can't have a credit score,
Okay,
right? If you don't have a credit report, automatically it's just like if you don't go to school or
okay,
you don't go to or you don't write an exam,
mm,
you get zero, right?
okay,
So that is just how credit reports is. So now, you not having the credit report means that your credit score is zero. So if you're coming to assess credit and we check and we discover that, oh, there is no record for you, right?
okay,
So
okay,
that means you have not been through the journey. You don't have an experience or an idea of how credit operates or how to handle credit. So in that kind of a situation, okay, back to your question, how? Now, if you want to build a credit, right? Now, you need to start by one, opening an account.
okay,
I mean, you need to have a bank account. That's what I mean.
okay,
Now, having a bank account and having an efficient and consistently run a bank account can actually give you one can give you can actually be a start. Now,
okay,
what do I mean by that? That is number one. Number two is secondly, take a credit,
okay,
right? One, if you run your account, if you have a commercial bank account and you run it consistently, we have banks out there today that because of the consistency of your cash flow in the account, they will offer you a credit. So that
okay,
is where you start
okay,
from. So once you are being given access, some banks will tell you, oh, hello, Mr. Lagbaja, you now have access to a 150,000 naira, have access to 100,000 naira, because they've seen that, fine, you've not taken credit before, but the way you're managing your financials, your cash flow, they feel, oh, you are a good person, you have cash, so you can access credit. So from that offer, you can take credit either 50,000 naira out of the 100,000 naira, that they open for you as a credit. So once you access the 50,000 naira, then within you, it's with intentionality. If it is for a month, if it is for 2 months, you make sure that you follow through on your repayments. So when you are able to make that repayment before the second month due, definitely the bank must have upload your report to the credit bureau. So in
okay,
that case, you have a report card, which is your credit report,
reports,
right?
okay,
So that is actually what I advise people to do. Once you have an account and you run it consistently, definitely the bank can give you, access to credit. Then from there, you explore that credit, then follow through on your repayment. Then before the payment ends, the bank would have upload your credit as, oh, you pay down on this, you are excellent, the whole transaction is performing, you don't have overdue, like that. So with that, you have a pass mark. So with that particular credit report, you can take it anywhere. That gives every financial organization access to your, credit report. And that shows that you are a trustworthy person just because you pay down on your loan.
Okay.
You didn't default.
Okay, that's also an advantage of the credit score. You have
Yes,
more access,
access
more
to
access
credit.
to credit. Okay, okay. So, based on the topic, what do you have for us? Like, what are the things that you've planned out to just discuss with us?
Okay, now, when you look at, like I stated, building credit,
Okay.
it's actually important, and oftentimes you see entrepreneurs as big as they have, coming to a finance house to access credit, as urgent as it could be, and
Okay.
they are being turned down, you know, all because they have a bad credit score or they do not even have a credit report. Now, what I advise is there are some, building credit is all about, like I mentioned, having an history, a consistent history that shows your attitude towards previous credit obligations. So when you are able to build this history, right, by the time you need, it is not the day you need credit. I've had people say, oh, I don't like taking credit. I don't like this. I just run my business with my money. I just run. But I always tell people, it's a frank truth. You will always need credit one
At some
day,
point,
right?
yes.
At some point in time, either directly, just like we define credit to be for exchange for, value, money, goods, and services is either you want to take, products in credit, some business from some FMCG companies will go through your credit report. So if you don't have one, it might either affect, your accessibility of those products. Two, it might either reduce the quantity or the volume of products that you are actually bidding for, right? So those are the two things that could happen. You understand? So when you have when you build this and you have that history, you understand, it will actually foster approval of whatever you're bidding for, be it in services, be it in goods, be it in funds. So what are the components that you see or that or borrowers or that finance company look out for
Okay.
in this on this credit thing. Now the thing is the limits. What are the limits of credits that you've actually accessed before
Okay.
now? Then how many accounts have you run, right? So are there balances? Now, if there are balances, take for instance, you've been taking credit and you now have maybe like uh, 10 million balance with like five open accounts and you're servicing those loans consistently, fine, is performing, but at the same time, you have serial, open accounts that you are servicing at that moment in time. So this might affect you. So these are some of the components you understand that you can find in those reports. And it is important for our entrepreneurs out there to understand this. As good as credit is, you
Okay.
understand, to enhance your business, it is also important for you to have the understanding how to manage credit. Like I always tell people, it's not a bad thing for you to take credit because sometimes when some entrepreneurs they default and you are like asking them, madam, okay, why did you do this? They feel so bad. Why? Because they just have a one-sided knowledge on accessing credit, but they do not understand how to manage it. It's a two-way thing. You need to know how to access it by building your credit, right? At the same time, you need to know how to manage it. That one is another, side entirely. But which all entrepreneurs need to understand. As you're taking the credit, you know that you avoid too much of exposures. So we call it exposures. Once your exposure is too much, now my advice is that you benchmark your credit. to 30%, right?
Okay.
So you don't overshoot yourself, overexpose yourself in a way that you will not be able to carry the burden and it will now tarnish your image because that tells more on your attitude and which might impact, your opportunity in the nearest future.
Okay, okay. Based on what you just said now, I wanted to ask what are the common mistakes businessmen and women, what are the common mistakes they make?
Okay, now, so far in this, in my interactions and engagement with entrepreneurs, oftentimes, like I mentioned, in terms of repayment, most of entrepreneurs, CEOs, oh, I'm a big person, I'm a big that, you know, you have a repayment, maybe say a repayment of 100,000 and the money is not there yet. Instead of you to say, okay, let me make a commitment, even if it is 50,000, let me send this across so that at least my creditor will know that, oh, I'm committed to making, the payment. They hold back, right? And they holding back make their account to be overdue, right? And once your account enters overdue, right, enters non-performing, it's an issue. Some will say, oh, I can pay once. In fact, before the due date, you open an account, a credit account for like 3 months. First month you didn't pay, you say, oh, Shebi is just everything is just 1.5 million. Interest and I will pay together before you did it. You've forgotten that the first month your credit report was updated, the second month, the credit report was updated, and before the third month, your credit report has stated something else, right? So this is actually one of the major mistakes that entrepreneurs make that affect or impact their credit report negatively, and which at the same time would limit their chances in the future request.
Okay, okay. So we have some questions coming in, and I'm going to be reading one. It says that what if it is against my faith to take a loan, but I'm a business owner seeking partnership and business growth?
All right. So when it comes to credit, it's just like as everybody does business. Business is not, excuse me, business is not limited to a particular faith.
Mhm.
Across all faiths, people does business and people also use fund,
Okay.
to finance their business. And at the same time, each and every one, have various ways they get funds, right? Be it through family, be it through finance house and
Okay.
all that. But when we're talking about building credit, it's all about building your credibility to access credit. And as a matter of fact, it doesn't have to do with faith. That's what I would say. You understand? But at the same time, um, credibility tells more of your trustworthiness, right? And if you consider that, you will even want to prove yourself that you are trustworthy,
Worthy, yeah.
regardless of any faith you belong, right? So it's something, each and every faith that we know also preach about trustworthiness, trust.
Yes.
So when we have this understanding, we know that, oh, it's not really about, well, what faith I belong to or not. You
Okay.
understand? So, and so long you want to grow in your business, you need finance to support and back up your business. You will definitely need credit.
Credit. Okay. Okay. So another question says that there are institutions who do not update this report in real time, even when customers have paid up. So in this instance, what should the person do?
Okay, so one of the advice I do give to people is, anytime you are into a credit agreement with any company,
Okay.
after you are done paying down on your credit, you need to make sure, is either you tell your account officer to make sure that he or she reconciles your account and
Okay.
update your credit report. And at the same time, you can also approach, the company and tell them to send you your credit report.
Okay.
So this is quite important. And one mistake that I know that entrepreneurs make is nobody, you know, um, talks about this or come back to credit because everybody just, you take credit. I've done my repayments, I've closed that account, I'm looking for where to get, another one. You don't bother about, this. So one of the advantage of this particular platform is to also create awareness. You understand? For entrepreneurs to be intentional about monitoring their credit um, uh, credit well-being, so to speak.
Okay.
So anytime you take credit, just ensure that you check your credit bureau to know what your credit report is saying. And let me use this opportunity to also say that for some of entrepreneurs that mistakenly, just okay, maybe you're strolling up on your phone and you just see a credit advertisement and you click on it.
Just click on
You tap into it, oh, 50,000, oh, 100,000, oh, 10,000, like that. And you pick that credit, right? Maybe probably peradventure you forget to pay down on those credits or you pay and they didn't upload your credit report. I must tell you that most of all these pop-up loans or pop-up credits on your app, most of them with the volume of customers they have, they tend to fail in updating, the report of customers. All they are after is, oh, with this boss, then we get our money back, we forget about, even if you delay 1 day, 2 day, 3 days, some of them sometimes they just put your name, they forget it there till Jesus comes. So, but if you follow up, right, to check what your report is on the credit bureau, which you can do, uh, um, with any of the finance house, then you'll be able to see what is in there. Then you can always write them that, oh, you saw this, so they should clear it or send you a letter of non-indebtedness, at least giving you comfort that you are not
Okay.
indebted
Okay. So
anymore.
as an individual, we can have access to the credit reports.
You can have access
Okay,
to
just
it.
to go to the
Go
bank
to
or where
any
any
finance
finance.
house, just tell them, oh, I need my credit report. Can you pull my credit report for me?
Okay.
They
Okay.
pay, whichever token they
Mm,
place it. Actually.
Okay. Okay. So I want to just one last question. It says that do you mean that as a business owner or an individual, in order to access finance, I must go and take a loan even if I don't need it?
Now, like we stated, now there are some things that most times entrepreneurs encounter. Okay, you need a finance and you approach a lending house, say you need something of 20 million or 10 million, and you get in there, they are telling you, oh, or sometimes it might not even be openly exposed to you that, oh, this is the reason. But we are saying that this is actually one factor that plays, right? Now, in credit, we have what we call C's, 5 C's of credit.
Okay.
Now, we have the capital, we
Okay.
have the character, we have the collateral, we have conditions, and one others like that. So now, character is actually very, very important. Now, what you taking credit or having credit history tells is, like I stated, it shows your trustworthiness that in this credit contractual agreement, you are a trustworthy person based on your history that we are seeing, right? Now, the second thought might be, oh, let us now look at your books, your cash flow, your financials, and all that. That one is second.
Okay.
Then other things will follow. So, what creates a kind of comfort for a creditor to proceed is one, your character, right? If a borrower sees that you have an excellent credit score, you've not defaulted and all that, it gives them comfort that, oh, this person, this woman, this man has never had a bad credit score. Then let us look at, his financial, how is his business doing, then we can proceed, right? So it's more important, it only shows your attitude towards, previous credit transactions. So, but if we do not see anything, we can't really determine who you are,
Mm.
if you are trustworthy or you are not. So that's actually one of the major things, and it's actually an internal mechanism that all finance houses use anywhere in the world. So we are just creating this awareness and also educating, our viewers out there that it's one like what the one of the viewers asked about, oh, faith based. It's not about faith based.
Mm.
More so, it's about telling of your character. It's about telling of how trustworthy you are towards credit. And that is why we encourage you that you start building it from the scratch. It is not until you need that credit, right? So if you have not taken credit at all and you are coming that, oh, you want a credit of 5 million naira. So a creditor would think twice. This person that has not handled, say, 100,000.
Mm.
So if I give him or her the 5 million, right? That is what happens when you see that some people will say, oh, I applied for 5 million. They said, I'm only eligible to, right? Because of one, I don't have a record. Two, either because of my cash flow of businesses. Either of these two will play a key role in determining whether you will be given what you are asking for.
Okay, okay, wow. This has been very, very insightful, and I've learned a lot of things, even things that I do not have an idea of. I have much understanding of it now. Okay, so from what you have said, I've been able to learn that number one, the bank statement is very, very important. And the bank statement shows your transactions, it shows how you've been able to undo cash, how you've been able to undo your finances. Okay, and so for someone that does not taken a credit before, the person has to start with something. Take advantage of the opportunity your banks, your financial institutions are giving you, and start with something. And the more you make payments, and or how early you make that payment, increases your credit score and gives
Exactly.
you a good credit report. Okay, on a final note, what action points would you want to give your viewers? What should we hold on to? We've held on to a lot of things that you've said, which has been very, very insightful. But what is the final note you want to give to your viewers?
All right. To our viewers out there, I would like to encourage, um, I would like to encourage each and every one of us that one, um, it's important for us to let's try as much as possible to fulfill all our credit obligations as at when due. Like I stated, this tells a lot. I I have seen some reports, where say government agencies give people credit and they thought, oh, it's a free gift, oh, it's a grant, oh, it's a this. And most people just take this credit and they never pay it back. And on a long run, it eventually affects them in their businesses.
Mm.
And they have to go and look for those money to pay,
Okay.
even while it affects their immediate, request for another credit. So let us cultivate this habit of making sure we fulfill all credit obligations and at the same time to also save another business because finance houses are also doing their own business, which is business of cash. So the more you take credit and you didn't pay back, you are also harming their own business. So for mutual benefit, let's ensure, and at the same time, for us to have an each free access in a future credit request, we need to cultivate this habit of fulfilling all our credit obligations. Thank you so much.
Okay, so please let us cultivate the habit of fulfilling all our credit obligation. And on this note, we are ending this live session. Thank you so much for joining us. We really appreciate you, and I hope that you've been able to learn one or two things, if not everything, a lot of things from what we've done today. Thank you so much for joining us. I will see you next time. Thank you.